In this class, we would like to talk about efficiency measures. The efficiency measures are often called asset utilization ratios, and they are usually turnovers. The first turnover ratio is inventory turnover ratio. It is defined as cost of goods sold divided by inventories. The reason we use cost of goods sold instead of sales to calculate inventory turnover ratio is that sales includes profits and may inflate the turnovers. During the year, Samsung had a cost of goods sold of 200 trillion Korean won, and inventory at the end of the year was 18.8 trillion Korean won. So inventory turnover is 10.67 times. It means that Samsung sold off or turned over the entire inventory 10.67 times. As long as we are not running out of stock, the higher this ratio is, the more efficiently we are managing inventory. If we know we turned our inventory over 10.67 times during the year, we can immediately figure out how long it took us to turn it over on average. The result is the average days sales in inventory, which is 365 divided by inventory turnover. The days sales inventory of Samsung is 34.21. This tells us that, roughly speaking, inventory sits 34 days on average before it is sold. In this calculation, we used ending inventory. However, it is possible that for startup, ending inventory is quite different from beginning inventory. In that case, using average inventory might give us a better picture of startup's efficiency. Inventory measures give us some information about how fast we can sell product. Next, we would like to know how fast we can collect on these sales. The receivables turnover rate measures this. It is defined as sales divided by accounts receivable. The receivable turnover ratio of Samsung was 7.04 times. It means that Samsung collected its outstanding credit accounts and reloaned money 7 times during the year. This ratio makes more sense if we convert it to days. The days sales in receivables is defined as 365 divided by receivable turnover, and it is 51.85 days in sales. Therefore, on average, Samsung collects on its credit sales in 52 days. This ratio is also called the average collection period. We could also say that Samsung have about 52 days worth of sales currently uncollected. Another efficiency ratio that measures big picture of firm's efficiency is asset turnover ratio. It is defined as sales divided by total assets, and the total asset turnover ratio of Samsung is 0.83. In other words, for every dollar in assets, Samsung generated $0.83 in sales. In addition to total asset turnover ratio, there are net working capital turnover ratio and fixed asset turnover ratio. These ratios measure how much work we get out of our working capital or fixed assets. As long as we can keep our sales, a high value is preferred.